Hi everyone, my name is Joel Ganino and I'm here with Andrew Larcombe of Morbanx. Thank you for joining us on the webinar recording today. The topic of the discussion is how to pay off your mortgage in half the time. And obviously the feedback that we're hearing from a lot of people around these recent increases in interest rates is there's a lot of mortgage stress out there. So we want to add a lot of value to your financial life in giving you a few tips on how you can just give yourself some peace of mind. I'm here with our mortgage expert, Andrew at Morbanx. Andrew, thank you for your time today.
Thanks, Joel. Hello, everyone.
Andrew, you've sent me a guide here, how to pay your mortgage off in half the time, and I have to admit, I think it's absolutely fantastic. The first point that you've got here that everyone should focus on is having a goal, starting with the end in mind. What do you mean by that?
Well, there's a few things you need to consider. You've got to think about the time frame you would like to pay down your mortgage. I mean, it's all right saying, let's get this mortgage paid off quicker, but you really need to set yourself that goal and be specific about how long you want to take to pay off your mortgage. So in order to do that, you need to work out what the loan repayment needs to be. And so we've got calculators on our website, morbanx.com.au, that can help you work that out. Then we've got to find out. Yeah, thanks. And then we've got to find out what the difference is between the current loan repayment that you're making and what the loan repayment needs to be in order to pay off the mortgage in that period of time that you've specified.
Yeah, of course. So I suppose you're saying if you know that you want to sort of pay it off in 15 years, you just sort of say, okay, well, what does my repayment need to be if this is to be paid off in the 15 years as opposed to the 30 years that the bank says? And that'll spit out, okay, well, it should be this amount rather than this amount. And it's just a matter of, closing that gap. Okay, so that makes sense because dot point 2 is you've got here, you want to help close that gap. You said you want to utilise the loan features smarter. So can you talk us through some of the loan features that you're talking about there?
Sure. There's a few features. I mean, I think everyone probably knows the one about repayment frequency. We'll talk about that in a minute. But there's a few there that people don't know about, and one of them is nominating your repayment date. Some lenders will allow you to pick the date that your repayment's made, and obviously it's the day before you get paid your salary is not the date you want your mortgage payment to be. So having that nominated 1 or 2 days after you get paid will ensure that payment's made, and then there's no worries about that getting mixed up with your normal daily expenses.
That is great. I didn't realise you can actually nominate your repayment date. You just sort of sign your agreement, don't you, and just know to have the money there. But there's a lot
going on, Joel. When you get finance, there's a lot going on, and that's like one of those things that no one ever sort of takes advantage of. But it's there. A lot of lenders offer it.
Yeah. And then that takes us through to like the repayment frequency. I mean, we all sort of know, can we pay it weekly and fortnightly, but we sometimes don't do it. But do you have a formula, like why should someone transfer it to weekly? Is it in line with their paycheck or something? Or
Absolutely. So if you get paid weekly, make your payments weekly, because then your money comes in, goes straight off your loan, and every day that you've paid payment off your loan means your loan is reduced in balance, and therefore the interest that gets charged is reduced also. But there's no point having a weekly payment on your mortgage if you only get paid fortnightly. So if you get paid fortnightly or monthly, you would make the payments over those periods. So in line with those payments.
No, that's really good. Your next point here, you said salary crediting. That's a feature of some lenders.
Yeah, it's actually more a feature from your payroll office. So if your payroll office allows you to split your pay up into more than one account, so everyone gets can get their pay paid into their normal bank account. Well, your home loan's just another bank account essentially. So you can ask your payroll to split it up so that your mortgage payment gets paid straight into the home loan and doesn't have to hit your account, and then you make the payment out. So you can have your payment split 2 ways: home loan and your normal transaction account.
Yeah, and as you said before, the days that it's remaining in there, interest is calculated daily. So the more you've got against the principal, the less interest you are going to pay. That's really good. The next feature here you have are making lump sum and or additional repayments. I dare say that goes a long way to helping close that gap above. Lump sum, what do you mean by that?
Well, I mean, if you're lucky enough to get a tax return, or if you've got some money saved up, it's better to have it either paid off your home loan and again reducing that debt and therefore reducing the interest bill that you're getting charged, or having it in an offset account, which essentially does the same thing. If you're able to get an offset account, that is the best way to go, I believe, because it's just a transaction account that you can put money into, but it saves you interest off your home loan.
Yeah. So rather than have money in like one of these savings accounts, you're saying just put it in the offset, save yourself the interest rather than trying to earn the interest.
Yeah, well, Joel, if you, I'm no tax accountant, but if you earn interest, you're going to have to pay tax on it.
Yeah, you do.
Earnings. But if you put it in an offset account, you actually save interest, and you're obviously your mortgage is at a higher rate than any savings interest you're going to earn. So it's a really effective way of reducing the term of your loan.
Yep. And then lastly, as a feature, credit cards, utilising credit cards smarter.
Yeah, if you are able to get yourself an interest-free credit card, when I say interest-free, an interest-free period on your credit card. So that's when they first came out, they used to have 25 days interest-free. So you get your statement on your credit card, and then you had 25 days before you had to pay for it. So all of that time was interest-free if you paid it off in full. So if you get one of those, then you can use the bank's money essentially to do your shopping and so forth, and then make sure you clear it every month that you don't incur any interest charges.
Again, I suppose it's just another way of maximising the amount of money that's off that principal balance, reducing that interest daily.
Exactly.
That's really good. Andrew, I must admit, so thank you for going through the loan features, but I think the next section is what I love the most, overlaying it with some strategy. You know, sometimes brokers don't really discuss lending strategies with you. It's all about your interest rates and your cashbacks. But this, I think, is what's setting you above the pack. So you got here some of the strategies. Strategy number one: negotiate your rate with your current lender. We've heard it all before. Maybe not a lot of people do it. What's your sort of take on that?
Well, I'd encourage everyone watching this to contact their broker and ask them for help to negotiate the rate, because as brokers we have a bit more power to get that rate reduced, and just by simply asking the question we can sometimes get that rate reduced, and it does help that we've got other clients at that, I'm sure, at that lender that gives us that extra buying leverage. Power, I guess. Leverage. That's a better word for it.
Really good. So obviously that's about saving interest. So maybe keeping the repayments at the same level, but if you save interest, again, more is coming off the principal. And then again, with reviewing your options to refinance with other lenders and getting a better deal. Again, I'm assuming further save interest, and that's what you mean by that?
Yeah, we don't want to look, we've got over 30 different lenders to check out, but we don't want to do that before we've tried to get you the best rate at your current lender, because then we can see if we can actually save you money by moving you to another lender. There's no point just moving for the sake of it. And if we can get you a better rate at your existing lender, and we can't get that better than that elsewhere, well, you'll stay at your lender, but you've got yourself a better rate.
Yep. No, very, very good. Next strategy, consolidating existing debts. I'm assuming what you're saying there, potentially the credit cards, personal loans and things like that. You're saying put them into your mortgage. What does that sort of do?
Well, a lot of those other sort of finance types like credit cards and personal loans, as you mentioned, they're at a higher rate usually. So obviously putting them on to a lower rate, which is your home loan, is going to save you interest and therefore save you that expense and get that paid off quicker. Now you can keep the payments as they are if you're able to do that, and that way those debts will get paid off in no time. And it's important though to make sure when we're doing that sort of thing, we structure it right so that anything that you can claim a tax deduction for investment purposes, let's say, we keep that separate on a separate statement.
Yeah, that's really good. That's really good. And now, speaking of obviously things with investing and things like that, your next two topics are debt recycling using a couple of offset accounts, and then obviously income in investing. Debt recycling. What do you mean by recycling your debt?
Well, these are a bit complicated, Joel, but we do have experts to help our clients do some investing and get the right advice there. But if we structure it right with the multiple offset accounts, like for example, myself, we have my wife and I have a joint account where we put all our income in. Then we have our own separate accounts where we have little bit of play money for each other.
Yeah, good. Yep.
Yeah, no arguments there. And that's all working. While that money's in that offset account, that's all working to pay off our home loan a lot quicker because it's reducing the interest that we get charged. So,
that's really good. That's excellent. And income investing, we were speaking earlier about this topic, and this had me fascinated. So you're basically saying that obviously if you do borrow some money to invest in, obviously the bank is going to charge you interest on that at whatever percent. But potentially, if you did your research, you spoke to professionals, and you were able to find an investment that you're comfortable with that generated a higher income than obviously what you're paying out in interest, that gap there is obviously what you can use to further reduce your home mortgage, isn't it?
Yeah, essentially the profit from that investment you use to reduce your debt.
Principal debt. That's really good. But this is why you're the expert. And your last couple of points here, which I really like, obviously, you've mentioned here that we've got to stay disciplined to obviously our objective of paying the mortgage off in whatever time frame. But I think what is the best part of this document that I can see is you've also got here, like, let's not stress too much about it. If you're doing everything that you can, and your numbers are working okay, everything's sort of a bit of a balance, and that is really a big key to managing money, isn't it? Everything being a balance.
Yeah, you've got to have balance in life, and it's the same with this sort of thing. You don't want to stress over it. If you are stressing over it, contact your broker and see if we can help you at all. Remove that stress by sorting you out.
Well, that's fantastic. Andrew, do you want to give a brief spill on Morbanx and your team of brokers and how people watching this webinar today can reach you and you can assist them with these topics that we discussed?
Thanks, Joel. So Morbanx has been around since 1999. So we've got a bit of experience behind us, and we've got brokers around the country. And of course, these days we can do everything remotely by video meetings. So that helps. And we've got over 30 different lenders to help. And we our main thing is trying to help clients remove that stress factor, and also helping them pay off their mortgage sooner. If they're buying a house, helping them get that sort of thing. Any mortgage finance we can help with.
That's excellent. Well, Andrew, thank you so much for sharing your time with us today. Everyone watching, we really hope you got a lot of value out of this session. If you want to book a chat with Andrew to go through some of these strategies or discuss your own finance situation, I believe there'll be an appointment booking button located somewhere on this webinar. Call the number, send him an email. I'm sure Andrew will be more than happy to help. Thank you again, Andrew, for your time.
Thank you, Joel.
Enjoy your day, everyone. Thank you.
Thanks very much.